If you guys didn't have a chance to take a look at the news on Tuesday, the new CPI report came out for the month of January, and unfortunately, inflation rose more than expected. The CPI report, or the Consumer Price Index report, is a big influencer of whether or not the stock market and mortgage rates are going to be favorable. Now, what I can tell you is if you've been following the real estate market over really the last year to maybe year and a half, you saw a huge fluctuation upwards in terms of prices for homes. Also with that, you saw the stock market perform very, very well. Now, obviously, inflation hit a huge peak really the summer of 2022, and that's when everything changed. Now, after the summer months and really the peak of the real estate market, interest rates actually started to climb and climb substantially. They actually peaked about the end of October in 2022, and really over the course of the last few months, due to some good inflation reports, rates were actually falling quite substantially. Now, actually, as recent as February 2nd, interest rates had fallen to the low fives. Those are interest rates that we haven't seen since August of 2022. Now, the downside of that, we've actually seen interest rates climb almost an entire percent. We're sitting at about 0.75% just since February 2nd. Now, you may be asking what exactly came back on that CPI report that is causing interest rates to continue to climb and the stock market to continue to fall. The CPI was up 6.4% from the same period in 2022. Unfortunately, both of these numbers were higher than expected. Now, those are numbers for the month of January pushed out in the month of February. What I can tell you is the month of October pushed out in November, the month of November pushed out in December, and the month of December pushed out into January were all good months when it comes to the CPI report. For example, the consumer prices rose 0.4% in October, less than expected. Also, the consumer prices rose less than expected in November, up 7.1% from a year ago. And consumer prices fell 0.1% in December, in line with expectations from economists. So you may be asking, what exactly does all of this mean for you? Let's say you bought a house in 2022, or maybe you're looking to purchase a house in 2023. I'm a firm believer that purchasing a house, if it makes sense at the current interest rate that you're looking at, purchase the house. But certainly the report that came out yesterday is not going to be helping anyone in the real estate market, or really anyone that's investing in the stock market, because as you can see, if you invest in the stock market or if you're looking to purchase a home right now, you will likely have already seen a drop in your stock portfolio and probably a continued drop moving forward. And you will also see a continued hike in interest rates. Now, the downside of that is because of the last 2 weeks, interest rates continuing to climb, we still won't get an additional report out for another month, hoping that the month of February and the CPI report from the month of February is hopefully better than expected to turn things back around. So what does this mean moving forward? Obviously, myself being in the real estate sphere, owning a real estate company, and really affording my entire lifestyle in the realm of real estate, this is something that I am looking at on a monthly, if not weekly basis, checking the news to see if there's anything that's going to impact interest rates. Because as we all know, if interest rates do fall, that means there's going to be more buyers out. If there's more buyers out, there's going to be more competition. If there's more competition, you're likely going to shift from a buyer's market to a seller's market. Now, what I can tell you firsthand, actually being a realtor and doing this on a daily basis, is over the first 45 days of 2023, I've seen a handful more buyers out on the market actively looking for a home. What I can tell you is at the end of 2022, it was very, very slow. The months of October, November, and December were a very, very slow quarter for me. Now, obviously, the rest of that year was a little insane. Now with 2023 full in swing, I can't tell you how much of an impact this report is going to have in the next month or two. Obviously, my hope is the month of February's report, when it comes out in March, performs better than it did in February and things just continue to head the other direction. But what I can tell you is right now the real estate market is certainly better than it was in Q4 of 2022. So again, if you are someone that's looking to purchase a house, don't necessarily be afraid. I just closed on a house about 2 weeks ago and got a tenant in place. It's not cash flowing, but it was a property that I knew out the gate was not going to cash flow, especially at the high interest rate that I'm sitting on. But I also know that down the road too, and I'm not in a rush to get this done, I know down the road I can refinance that and the numbers are going to change drastically. So if you are someone that's actively looking to purchase a house right now, I ask that you not be discouraged and just make sure that you're doing your due diligence when it comes to that particular house. Whether that house is an investment property, whether that house is a house that you're actually going to occupy. I'm always a firm believer on purchasing over renting. Now, yes, it does need to make sense, just like any investment needs to make sense. But at the end of the day, if the numbers make sense and you're comfortable with purchasing it, I would say purchase it. Get as good of a deal on it right now as you can with a little bit softer of a market that we have, and look to refinance down the road. Thanks again for watching, guys. Make sure to like and subscribe. It really does help, and stay tuned for the next video.